Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of top strategies for successful real estate syndication. Creating the syndication structure. After identifying a property, the next step is structuring the syndication. This involves setting up the legal and financial framework to manage the investment effectively. Here's what sponsors typically consider. Legal formation. Most syndications create a limited liability company, LLC, or a limited partnership, LP. This protects investors from personal liability. Investment terms. Clear terms outlining investors' rights, profit sharing, and exit strategies are established. This transparency helps build trust. Regulatory compliance. It's critical to follow securities laws to protect both the sponsors and investors. Many syndicators work with legal experts to ensure all documents are in order. Financial planning. Establishing a budget, including acquisition costs, operating expenses, and potential income, is vital for a successful venture. With a solid structure in place, sponsors can proceed to the next step, raising capital. Raising capital from investors. Securing funds is essential to making the project happen. Sponsors must actively attract investors willing to contribute capital. Some effective strategies include networking events. Attending real estate seminars or local meetups can be a great way to connect with potential investors. Marketing materials. Sponsors often create detailed presentations that outline the investment opportunity. These documents should highlight the property's strengths and the expected return on investment. Personal outreach. Making direct connections with individuals who may be interested can yield positive results. A personal touch can make a significant difference. Online platforms. Nowadays, various crowdfunding platforms allow sponsors to reach a broader audience, making it easier to raise the necessary funds. Building trust and credibility is key in this phase since investors want to ensure their money is in good hands. Managing the investment. Once the investment is funded, the next phase revolves around management and operations. This ensures the property is maintained well and keeps generating returns for investors. Responsibilities include property management. Whether in-house or outsourced, effective management is critical. This includes tenant relations, maintenance, and rent collection. Regular updates. Keeping investors informed through regular reports creates trust. This can involve monthly or quarterly updates on financial performance. Financial oversight. Monitoring expenses and income closely ensures the investment stays on track. Adjustments are made as needed to maximize returns. Exit strategy management. Outlining potential exit strategies early allows for smoother transitions down the road. This could include selling the property or refinancing. Effective management not only preserves the value of the investment but also fosters a positive relationship with investors. Each of these steps is vital for ensuring a successful syndication process, paving the way for future opportunities. Legal aspects of real estate syndication. Understanding the legal side of real estate syndication is crucial for both investors and syndicators. This part of the process can be complex, but grasping the regulations and necessary documents helps protect everyone involved. Let's explore 2 key legal areas: securities law compliance and the importance of operating agreements. Securities law compliance. Real estate syndications often involve raising funds from multiple investors. This process brings it under the scrutiny of securities laws. Following these laws ensures that offerings are legal and that investors are protected. Here's what you need to know. Regulation D. Most syndications fall under Regulation D, which allows companies to raise money without going through extensive registration. However, they must follow specific guidelines. Accredited investors. Syndicators often target accredited investors, those with a high income or significant net worth. This distinction matters because it changes the rules about who can invest. Disclosure. Clear and honest disclosure is essential in any syndication. Investors need to understand the risks involved and how their money will be used. It's necessary to keep compliant with these laws to avoid legal troubles down the road. Think of it like the foundation of a house. If it's not solid, the structure will struggle to stand. Operating agreements and LLCs. Operating agreements are vital when forming a limited liability company, LLC, for a syndication. These documents outline how the investment will operate and detail the rights and responsibilities of all members involved. Here's why they matter. Protection. The main goal of an LLC is to protect personal assets. If something goes wrong, only the LLC's assets are at risk, not your home. Clear roles. Operating agreements define each member's role. Are you a passive investor or one who makes decisions? Clarifying this helps prevent conflicts later on. Financial terms. They include how profits and losses will be shared among investors. Clear terms reduce misunderstandings and build trust. Without a solid operating agreement, you're navigating without a map. You may arrive at your destination, but the journey can turn rocky fast. Protecting your investment means being proactive about these legal aspects. Understanding these legal considerations not only safeguards your interests but also ensures a smoother syndication experience for everyone involved. Challenges and risks of syndication. Investing in real estate syndication can be exciting, but it's essential to understand the challenges and risks involved. As an investor, being aware of potential pitfalls helps you make informed decisions and prepares you for what could happen in the future. Let's explore some key areas that can impact your investment outcomes. Market and economic risks. Market fluctuations play a significant role in the success of a syndication. Understanding these risks can help you gauge the health of your investment. Here are some factors to consider. Economic cycles. The economy goes through cycles of growth and decline. During downturns, property values can drop, and rental income may decline. Interest rates. Changes in interest rates can affect mortgage costs and, ultimately, profitability. Rising rates may lead to higher borrowing costs for the syndicate. Supply and demand. A surplus of properties can decrease rental prices, impacting income. Conversely, high demand can drive up property values. How often do you check economic trends? Keeping an eye on the market can help you make better decisions about when to invest or exit. Management risks. The experience and capability of the syndicate sponsor is crucial. The sponsor's management skills can make or break the investment. Here's what to look out for. Track record. How successful is the sponsor in previous projects? A solid history can indicate reliable management. Decisions made. Poor management decisions can lead to wasted resources and lost profits. Ask yourself, are the sponsor's decisions based on sound research? Communication. Clear communication from managers about the project's status is key. A lack of updates might indicate trouble. Do you trust the management team? Building a relationship with the sponsor can help ensure your interests are aligned. Liquidity risks. One critical aspect of real estate syndication is liquidity, or how easily you can exit your investment. This can pose significant challenges. Long-term commitment. Many syndications require investors to commit for several years. This means you may not have access to your money when you need it. Exit strategies. Understanding how and when you can exit the investment is essential. Some syndications have structured buyout options, while others do not. Market conditions. If the market is slow, selling your share may take longer than anticipated, causing frustration. Have you considered how long you can tie up your investment? Planning ahead can save you from potential losses down the road. In conclusion, while real estate syndication offers great opportunities, being aware of these risks can empower you to make thoughtful decisions. Always do your research, ask the tough questions, and consider your options carefully. Successful case studies in real estate syndication. Real estate syndication has led to many success stories across various sectors. These examples showcase how investing with a group can yield impressive results. Let's take a look at some notable cases in both commercial and residential real estate to understand what made them work. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.